presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Mike in Southern California. Hey, Mike, what's going on?
Hey, Tom, nice to talk to you again. And I have to start out and first tell you, I love this trading room. This thing is great. This app, it works great. And getting all the information, you're like instantly there. No delay, nothing. That's
I know.
great.
I appreciate your growling problem with us.
Your channel is in my pocket all day long. It's wonderful.
Thank you, man.
again.
Thank you.
Now, Tom O'Brien.
Welcome, folks. This is Jacob Shoup filling in for Tom O'Brien. I hope you all are having a wonderful day. A lot of news coming out. Let's take a look first, just what the market's doing right now. In the ES Mini, we were at 5,051, so still on that kind of sell-off. Sweet levels we can get to in it. The Russell down about 0.12%. Currently trading at 1959. The NQs at 17,574. And the Dow futures back up that 38,000 level. It seems, probably to finish out the week, we're still going to be down. It looks like today we'll finish down, and then most likely tomorrow that trend won't change. We have some news coming out as well regarding retail sales, and they are up. And that is not always a great sign for inflation. So we'll kind of see how all of that works out and what the market kind of thinks. The gold contract trading just below 2,400 or at 2,398. Of course, we had a pretty big rise on it and a few down days, but that's kind of to be expected as well when you have such a increase that gold has seen. Silver at 28.39, and then copper, man, up 2% today. We're at $4.42, which is awesome. This is making super highs, which is great for that contract. Crude oil, of course, down at 82.14, which is super nice. We had more supply than I think people had anticipated. Even, I think it's today, but the U.S. government is reinstating an embargo on Venezuelan oil. I talked about this a little while ago. The whole idea was that if they were going to promise free elections or whatever, that they would lift the embargo. Well, that lasted for a little bit, and then Maduro decided just to jail his opponent. Old habits die hard, right? We have Tesla right now trading down 275, trading 2.75% at 151.11. Of course, a lot of people got fired, and then you had an investment bank come out and say that the robo-taxi focus is not what Tesla needs to be doing. I also think as well, Elon Musk is such a polarizing character, and he definitely did go after somewhat influential people. And I think to an extent that there are politics involved in that, but overall, they have some operational issues. Of course, the competition they face from China going forward is massive, and Elon did, kind of underline that. So I think there's a lot of different things kind of going on here with Tesla. Steel Dynamics at 136.10, down 2% today, and the dollar at 106.13. Let's take a look here at TSM. So we're down about 5% today. So what's going on? So the first quarter profits rise at 9%, and that beats forecasts. Obviously, this is, let's see here. All right, so from January to March, net profit rose 6.98 billion US dollars. That's up quite a good amount in Taiwanese dollars. It was 225.5 billion, up from 206.9. The profit beat estimates, which is a weighted forecast that they had going against it. This is first quarter revenue rose 13% year on year to 18.87 billion, better than the company's previous forecast of 18 billion to 18.8. The company last week announced first quarter revenue in Taiwan dollars. It was good. Why are we down if they're beating estimates? Well, essentially what they said is they're seeing a future where iPhones and PCs are going to kind of go through just a little bit of a downturn. They're not going to be producing as much, and that's going to impact the company quite a bit. So we're seeing kind of, 5% drop here. I still think, and I honestly, I'm looking at it, somewhat significant volume as well. However, I think, this company is going to stay, and the semiconductors are going to stay regardless of what it is, whether it's training AI, whether it's going into all of our little devices, these companies will remain. And it might be an interesting, obviously I always say take your analysis on it. I always really suggest reading financials as well, especially if you're going to be a long-term holder of something. But I think TSMC is solidified in the market, and they're not going anywhere. And this might be an interesting buy opportunity as well. Now, of course, the heavy volume is interesting. You could also say this is coming from, people have been holding the bag around this level, right? And you get this news, like, okay, next quarter might not be so great. Maybe the quarter after that might not be so great. So why am I holding this thing? I've been riding it for the whole time, and maybe I just want to take some profit on it. This could be what's going on with it. So somewhat interesting to look into with that. We had Blackstone. They have done quite well. So let's take a look. Blackstone earnings rise as the value of investments climb. Right now, of course, they are down. They reported higher quarterly earnings as the value of investments rose across its major strategies. The private equity giant's infrastructure portfolio led the way, climbing 4.8% in the quarter, due in large part to big bet on data centers. Blackstone's private wealth business has the highest inflows since 2022, raking in $8 billion as resurgent public markets gave investors the renewed confidence and wherewithal to invest in private markets. Of course, these are also relatively safe investments too that Blackstone gets into. Net income was $847.4 million, or $1.11 a share, and that was nearly 10 times the $85.8 million it earned in the first quarter of 2023. Distributable earnings were $1.27 billion. This item totaled $1.25 billion a year earlier. Blackstone raised $34 billion. A large portion of that, around 60%, came from credit strategies. And then assets under management were $1.06 trillion, up from $1.04 trillion in the prior quarter and $991 billion a year earlier. Now, I do think too, like you have things going into more like fixed income. Obviously, bonds are going up. I'm not sure what the money market funds are doing right now, but a lot of people are transitioning back into some of the bonds as well, especially at these prices. But I do think people who are willing to take on a little bit more risk, but not a lot, will go for some of these private equity groups going on. And of course, interest in a lot of things helps as well with that. I wanted to pull up something regarding Tesla. So obviously, they've been focusing on robotaxi. A lot of people don't necessarily like that, but one of their major competitors in China has seen, 2 to 3 times increase. We talked yesterday how Volkswagen is going to start building out some more of their vehicles there, and that will be for the Chinese market. It remains to be seen if that goes out of it. But the point is, these Chinese car companies are going to be pretty competitive. And you had Xiaomi. That electric car sales 3 to 5 times higher than expected, and it just kind of shows you that the Chinese economy is really robust right now, and there's not any brakes being put on it, and that's a little bit different for the West. So folks, stay tuned. We'll be right back. We have Tim Ord on as well.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, It has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free. Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. You're getting a minute extra right now. How about that? So what we want to do here at TFNN. Anyways, talking about Xiaomi just a little bit to give you an idea of what this global market is going to look like. So, all right, the crowded Chinese EV market, obviously, they have really adopted EV in a major way. They even have, like, what are they using? They're using, like, some kind of liquefied gas for their trucks. Anyways, let's see here. The Xiaomi, it was under $30,000 for the base model of their new vehicle that they released, and it's $4,000 cheaper than the base model of Tesla. Had limited batches of 5,000 cars already produced, and then it just kept increasing and increasing and increasing. And China's really able to expand, or scale up rather, their production. I think you have some people now talking with like Yellen and even the EU saying that this is going to be a whole new kind of deal that they're going to have to deal with regarding China. It'll be interesting to see how it goes out. I mean, China can really just snuff out some of these nascent markets, which I think, is obviously a major problem. And if you want to stay competitive, in some ways you're going to have to add. I mean, we're already seeing, let's say, like tariffs for aluminum and steel. Those are supposed to be coming. That's from the Biden administration. Of course, Europe really wants to be careful about having their markets flooded with Chinese EVs and so on. And I think, again, this goes away. It's both. It's trying to protect the markets there, economically speaking, but also just being in kind of more control about what goods they have. It's infinitely infuriating. I was helping someone, they were redoing their house, right? And we were buying shelves and tables and everything off of Amazon, all of them coming from China, and everything was wrong. And I'm not saying that as like a cope because it didn't work. It's like the wrong parts were in it. And at some point you're almost like, is this like some like demoralization thing? Like, what is going on, man? It's so bad. Obviously I'm just playing around, but the point is I think being in control of the quality as well is going to be pretty important going forward. Let's talk a little bit about Nokia. Got it right here, actually. We're up $3. We're up 3.3%, which is crazy because they're seeing a double-digit fall in January and March sales as weak market for 5G technology, continues. So wireless and fixed network equipment maker Nokia on Thursday reported a smaller than expected profit and a double-digit fall in sales in the first quarter due to the market weakened by a lack of clients investing in 5G technology. One-off gains from Nokia's licensing business continued to profit. Net income attributable to shareholders was 497 million euros, up from 332 million euros a year earlier, and Nokia sales were down 20% at 4.7 billion. They say they're going to see an improvement in order intake in the second quarter, but I'm going to say, too, that I bet this is getting memed in some capacity. Anyways, I believe we have Tim Ord on the line. Is that true? Tim Ord, hello.
Yeah, we're here.
Fantastic.
Here.
So, guys, every Tuesday and Thursday, Tim Ord comes on the Tom O'Brien Show. It's the ord-oracle.com. We deeply appreciate his analysis, and it's always extremely insightful. So go give him a check out. That's ord-oracle.com. And, Tim, I am just getting your chart up now. It's going to be one moment while I do that.
That's right. No hurry.
Perfect. All right. So we have chart 1 up. This is the SPX.
Yeah, okay, SPX, and the second window up from the bottom is the SPX VIX ratio, and this is a weekly chart. And the only thing I want to point out on this is this chart goes back to about mid-2017, and normally when you get a higher high on the SPX on a weekly time frame and you get a lower high on the SPX, you got a divergence, and usually those are at intermediate term highs. And the last time that happened was at the high of October 2022. The SPs made higher highs, and that ratio SPX made lower highs. And we've been going on. All the light pink areas are those divergences in the past, and they all came at worthwhile highs. Even the October or the March 2020 COVID crash, it predicted that. It warned that decline was coming. But on the current time frame from mid 2020, or actually early 2023, I got the blue areas. Every time the SP's made a higher high, that ratio has made a higher high. Even on the current uptrend, going into the late March, early high, that ratio has made higher high. The market has since pulled back. But what I wanted to point out on this chart, if the SPs do turn up and go back up and make a higher high, which I think they will, and that ratio, the SPX VIX ratio on the weekly time frame makes a lower high, that'll be the time to worry. So I'm thinking this decline is probably just going down to fill the gap that happened around that 500 on the SPYs. I think to fill it, it needs to get to 496 area on the SPYs. I think that's probably what's happening here. Mm-hmm. But there was no divergence of intermediate term scale on that last high. So I'm thinking this is kind of a normal pullback in an uptrend. So let's flip to chart 2.
Fantastic. Give me one moment. All right, we have chart 2 up right now.
Right. This is the Zwag breadth thrust indicator, and it's a mouthful. But what you like, the bottom window is the NYSE advanced divided by the total NYSE stocks with the 10-day average. When you get down below -4, which we did here like a day or two ago, it's usually that's an oversold condition. And what you like to see when you hit 0.04, you like it to go right back to 0.06 within 10 days. Now, if you do that, we haven't done it yet because we're just hit that below that. I think we hit 0.35 on this recent decline. But within 10 days of that thing turning around, which has actually started to turn around, so the count has started now. But within 10 days, that needs to get back to 0.6. And if it does, that would open the door for another impulse wave to the upside. The red lines on this chart, or not horizontal, but vertical, are the times when this Zwag, I call it ZBT, Zag Breath Thrust Indicator. ZBT is just easier to say. And I marked 0.4 with the red line. Then when it got to 0.6, that's the blue line. And during the base period of 2022, part of 2023, he had 3 ZBTs there. Then he had one in October of 2023 that kind of set off, ignited that rally that from the October of last year to the current rally. So now we did get a point, below 0.04. Within the next 2 weeks, if we get 0.06, that suggests another powerful rally's coming. If we don't, then the market could get a little mushy here going forward. So we'll have to wait and see how this rally kind of turns out. But it's something that we're watching for. So we got 2 different things going on here. You got on page 1 or chart 1, the weekly SPX VIX ratio. On the next rally, it needs to hit a new high along with the S&Ps. If it does that, the uptrend on a bigger time frames and scale. Then on graph 2, which is the Zwag breath thrust indicator, the next rally needs to get to 0.6 to show that you got strength to keep going. So if both of those don't settle, we're probably at best in a trading range. There's a little saying too, like in May go away or something like that. There's an old saying. So will that be possible this year? Possible. It depends on those two charts. So we'll have to kind of wait and see. I see we're running out about time here. I don't know if we got to get to chart 3 or not, but
yeah, well, I can bring it up as well. Just give me a second. But yeah, I can see it a little bit how this, you have the ES Mini trading right now. We're at least at 5,050. I think the SPY is trading right under 500. So we're at 499 right now. A lot of this run-up had been going because of the ideas of lower interest rates. Obviously, that has changed a little bit, but I could see this also being kind of a general kind of overreaction, like in this oversold area. But Tim Ord, stay right there. Folks, we'll be right back with Tim Ord of the Ord Oracle in just a short minute.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Open Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Tigers, the inaugural session of Live Trading Fridays with Larry Pesavento was a massive success. Trades were communicated, questions were answered, and money was made. Every second and fourth Friday of the month, from 9 a.m. to noon Eastern Time, Larry wants you to join him as he places live trades and takes your questions. That's right, with this monthly subscription, you receive access to 2 live trading events. We are gearing up for the next session Friday, April 26, so there's still time to sign up. For this month only, use code LarryLive at checkout in order to secure $50 off your monthly subscription price for as long as you subscribe to the service. We'll see you next Friday, April 26, Tigers. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. This is Jacob Shoup filling in for Tom O'Brien. We are with Tim Ord of the Ord Oracle. Again, here is the website. This is ord-oracle.com. Go give him a check out. Tim, We are on chart 3 right now. This is TLT VVIX. I'm actually interested to hear what's going on with this.
Yeah, this is I do a lot of charts that measure acceleration of different type indicators, because if the market's just slowly moving up or slowly moving down, that trend's going to continue. But if you get kind of a short, I don't know, violence, the wrong word, but acceleration either up or down, chances are you get to a reversal pretty quick. And this is a TLT to a BVIX ratio. The BVIX is the VIX of the VIX. So it seems to work pretty well. I've used this chart. Matter of fact, last October, I think even on your show, that I was noticing this indicator was going up as the S&P was going down. And that's that light blue area back in October of last year. And I waited until Friday, because a lot of times Friday you get signals that seem to be pretty effective. And that actually picked the day of that low right at the bottom there. And this indicator is the one I used to pick out that low. We got something similar going on right now. Usually this indicator on a short-term time frames goes up and down with the S&Ps. And so, but over the last 3 days, I think it is, even today, even though the S&Ps are off just a smidge here, this ratio is going higher. This is just a daily TLT to BVX ratio. And so we're probably entering in some sort of a low. And if you look at the top window, it's a 10-day average, or actually at the rate of change on a 10-day average, which is 2 weeks. And next window lower is the RSI on a 10-day average, which is also 2 weeks. And both of them hit oversold here about 3 days ago. And both those indicators, or the indicators, have turned up, even though the S&Ps have not. So we're probably, messing around with the low here. How low is low? Most likely, let's go to chart 4.
Yep.
And most likely, I got the blue areas across the chart going horizontal are gaps. We got a gap above us. We got a gap below us. And to really fill that gap, we need to get to 496. I think the market's just trying to fill that gap for some reason, and I'm thinking this is probably going to do it. But if you look at the second window up from the bottom, this is real curious here. Normally, when the market goes down, the VIX goes up. And if the market goes up, the VIX goes down. Over the last 3 days, the VIX has actually gone down, with the S&Ps going down, not counting, actually counting today, I guess would be. But that's unusual. And also, when the VIX gets above its upper Bollinger Band, usually you're looking for a low, and that happened about 3 days ago. And we closed above the bid, or we closed on the Bollinger Band 2 days ago. Yesterday, we're below the Bollinger Band. The market was down, and also the VIX was down. And then today, again, we're down, and the VIX is down again. So this is not the start of a big decline. This is the ending of some sort of a correction phase here, but we still may close the gap at 496. The way we do it today, or probably not today, could hit it tomorrow, and that probably will complete the decline. So evidently there's a lot of open interest on puts and calls at around that 496 area on the SPYs, and the futures, that's right around 500 on the June futures. So that's probably where we're going to head. So I have to bear with it. We do have panics in the ticks and trend. The 10-day is right at 1.2, which is the number you need to have a panic bottom. The 5-day is around 1.35. We're at 1.37. That's the bottom window. So, but can the market still push lower today and tomorrow? Yeah, probably, until we probably get that gap filled. I got long here, actually last Friday to be exact, because I did get panic in the ticks and trend on a daily basis, and I thought we were going to start bottoming up in that process, and we actually kind of broke through. But I'm kind of just going to wait it out, because I don't think this is not a top of any consequence. This is the top of another trend that's probably going to break to new highs. If we're lucky, maybe still this month. If not, probably in May. And from May, we'll have to wait and see what the ZBT says and what the SPX VIX ratio says. So I don't know what's going to happen up there. I think the bigger trend in general this year will be an up year, and I thought we might match last year, as far as, up 27%. And that still may happen. Depends on just how much panic we get. Let's flip to chart 6 real quick.
Absolutely. All right, we're on chart 6.
Chart 6. The only reason why I think this rally is not done, there's really no top of a basing period, and this is the SPX monthly chart. If you notice, back in October of 2021, there was a divergence. The SPX VIX ratio on a monthly time frame made a divergence where the SPX made higher highs. That ratio made lower highs. Currently, we made higher highs on the SPX. That ratio made higher highs. So if we turn around and go back up and make new highs, and that monthly chart makes a lower high on the SPX VIX ratio, I think trouble can be found. But I'm thinking we'll still get to 5,700 at some point this year because there's a head and shoulders bottom, and a lot of times these projections on the head and shoulders bottom do give accurate readings where the market can go. And if you do the measurement on this head and shoulders bottom formation, it does give a projection of around 5,700 on the SPX. And we only did a 50% retracement. So I think that move we had going into the bottom of 2022 was just a consolidation phase, and now we're in an impulse wave. So I don't think a top of any consequences being made here. So, but it's kind of ugly on a short-term basis, but the bigger time frames, I think, are just fine. I don't see any big trouble coming here yet. So,
and so you can still see that 5,700 at the end of the year?
Yeah, I think we'll reach it, I don't know exactly what time I'll reach it. I don't see anything, forming here on the bigger time frame, especially if you get the VIX. That the SPX VIX ratio does a really good job warning that you're going into an intermediate term high, because the VIX starts going up before the actual top happens, and that hasn't happened yet. So we'll have to wait and see. But so I'm actually still bullish here. I'll probably have to wait to possibly 496 on the SPY before we turn up. But
I see.
I think newer highs are still coming.
Fantastic. Well, Tim Moore, stay right there. We still have a few more charts to go over.
Okay.
Folks, we will be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched The Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks. This is Jacob Shoup. I am with Tim Ord of the Ord Oracle. We were just looking at the potential movement for the SPX going forward. Tim, you're still with us?
Yep, I'm here, and let's go to chart 7.
Yeah.
So, as far as the S&Ps, I think the intermediate-term trend's up. The short-term trend, I think, is bobbing, but we may fill the gap at 496, and then from there we'll take another shot at rallying because we got pretty much a lot of indicators and are set up, but the market is going to probably go to that 496 area. But anyhow, let's chart 7.
Yes. What can you explain to me, because I think this is the first time I'm seeing this, what the Pring Inflation Index is?
Oh, the inflation, deflation?
Yeah, it says P-Ring or Pring.
Oh, Pring, yeah, Martin Pring created this indicator. He's a technical analysis guy if you Google, I think his first name's Martin Pring. Okay. And he created this inflation-deflation ratio.
Fantastic. So, anyways, yeah, I just was curious.
I'm sorry, go ahead.
No, yeah, I was just saying I was curious.
Yeah, it's Martin Prings. So, he had inflation. So, I combined the two and created a ratio out of it, and it seems to work pretty well. So, this is the monthly ratio going back to like 1990 or thereabouts. And so, that's the top window is the RSI for that ratio. The ratio, the second window down. The middle window is the monthly XAU. The bottom window is the XAU gold ratio on the monthly time frame. That goes back to 1984. But what I want to show is where we are on the bigger time frames. And so when this ratio, inflation-deflation ratio, when it's just rising, it's usually bullish for the market. When declining, it's usually bearish for the market. It's not an ideal indicator, but it does work well. And we're up, I circled in blue the inflation-deflation ratio on the monthly time frames, and it's up against that trend line, kind of a dotted blue trend line. If it breaks that trend line, it's kind of hard to see. I don't know how to really do it because I wanted to present the bigger time frame, where we are in the bigger time frames. But we're up against that trend line, that dotted trend line coming down from connecting the highs going back to 2022 highs. If we break that high, it's probably going to be a significant move in the gold market, actually for gold stocks. That'd be the XAU. I even got a little trend line drawn on the XAU there. Haven't drawn it real well, but we're up against a trend line on that XAU. And the bottom window is another important trend line. And it's also up against a trend line going all the way back to 1996. It looks like maybe 1996. And we're smack against that trend line right too. To get through that trend line, it's around 0.06, and we're 0.057. So on a bigger time frame, we're right at that trend line. And a break of that trend line, which is a 29-year trend line, it would really change the dynamics of the gold market. This is pretty much situated for the gold market, not gold. So it's predicting what the gold stocks will do, not so much what gold will do. But if you break that line, a 28-year trend line, that would probably open the door something similar to what happened at the 2002 lows. It would be a significant. I don't know. It would be significant. Well, at least, in my opinion, we'd at least get back to have another trend line drawn across there horizontally on the XAU gold ratio. It's around 0.175. In my opinion, if we break that trend line coming down from the 1996 highs, we most likely would rally back to that trend line at 0.175.
The horizontal trend line, right?
Yeah, that horizontal line. So that would be my guess where we would go. It would be, and probably be a fairly powerful move, because once you break a 28-year trend line, it's usually, it would be the opposite of what was happening here, because the market really hasn't changed a lot as far as that ratio on the XAU gold ratio. More or less, it bounced around, it looks like about 0.05 to 0.08, looks like, and really going nowhere since 2016. It kind of just stayed in a narrow trading range. After a narrow trading range, usually you get an impulse wave. After an impulse wave, you get a narrow trading range. So what this implies, once you break that trend line, you'll probably get a big surge. And that surge, in my opinion, maybe finds a resistance of 0.175, because that's where some previous lows were in the past. And to what that would indicate in gold stocks itself, it would be, we're 0.06, just round off numbers, you get a 0.08 or 0.18 is 6 times. Or, no, 6 would be 3 times, be a 300% move.
And even with an increasing in gold as well, the XAU, so those gold stocks would have to rally at an even higher rate as well, as opposed to just stay. Yeah, that's impressive, actually.
You're right. That's not even gold changing. That's gold staying exactly where it is, and just gold stocks. So it'd be a 300-point move in gold stocks. Well, if gold goes higher, so something significant in this vicinity is happening right now.
Yeah.
And I keep pointing that out, because has it broke that? No. Will it break it? At some point, yes. Will it break it next week? Don't know. Will it break this year? Most likely. The hard part is, when it will break it. So let's look at where we are as far as when we'll break that line.
Sure.
And I think I don't know. Okay, here's a chart number 8.
Yep.
This is the shorter time frames, and this is an inflation-deflation ratio on the weekly time frame. And we did get how to get signals on this indicator is when this indicator, when the RSI of this inflation-deflation ratio on a weekly time frame, not a daily, on a weekly time frame, falls below 30 and closes above 30. So all those blue lines across there are times when the RSI hit 30 and turned up, which is I got the blue arrows pointing to those times. And the last time we had it here, I think it was sometime in March. And so we rallied pretty strongly off those lows, and we're not even near on the weekly time frame of any high of any consequence. Normally you get up RSI up around 70 or so, you'll get a high, and those red lines are times when you got high. So we're on a buy signal right now on this ratio. And if you notice, if you look at the bottom, or actually the second window up, which is a weekly XAU, I had some bold circles on those. The bold circles are times when you get the weekly RSI about the same price as before. So we got a signal back in October of last year, pretty close to the same price where we got it again this year. So it's kind of two RSI buys in the same spot. Same thing happened in 2018 and 19. You got pretty close to the same prices, double buy signals at the same price. And you had at the 2016 low, you got a buy signal. Nothing really happened. You got another buy signal, and the market really took off. So I'm thinking the double buy signal in the same price is going to lead to, I think, a major impulse wave.
Yeah, totally.
That's
Tim, stay right there, because I want to hear the rest of this, especially with chart 9 as well. Folks, we'll be right back.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. This is Jacob Shoup. We are with Tim Ord of the Ord Oracle. We were just looking at the potential moves for gold, what it is doing regarding some other indicators. I want to say, too, Tim, we have a short segment here, but if you're new to listening to TFNN, and I know we have a bunch of new people, and you ever really want to learn and dig into what Tim's talking about as well, on our services page on TFNN.com, we actually have a few webinars that Tim had done, and he goes through a lot of the different indicators he looks at and why they matter to him. Anyways, Tim, we are looking at chart 8 right now.
All right, chart 8. The only thing I want to say about this is kind of an intermediate term chart. These are multi-month. I forgot I added, I think it's at least 6-month rallies normally. Mm-hmm. Some are shorter, but most of them are 6 months or longer. So anyhow, I flipped to chart 9.
Yep.
So this is just a short term. Basically the blue areas are when those two indicators, the bottom window is the 18-day average up-down volume indicator, and the next higher window is the GDX 18-day average of the advanced decline. So as long as those two indicators stay above -10, the -10 is the magic number, the uptrend's intact. And so we kind of, in March, looks like at 1st of March there, gave a buy signal, and that remains on a buy signal. And we kind of rocketed up here. And to me, it looks like we're probably in a wave 4 of an Elliott wave 5 up. I got it marked there on the chart right below the quote window there, as in blue. And I think we're screwing around with wave 4 right now. I don't know if we're completing wave 4 or wave 4 is complete. But it does look like, since those two indicators on bottom are staying well above -10, it suggests that the market's just internals are still strong. They're not declining. They're going sideways up around +20 range, both of them. That tells me probably another strong rally is coming, which will be wave 5. And that will break the new highs. How high, I don't know yet. But on a short-term basis, GDX is still on a buy signal.
Tim, thank you so much for joining us. Obviously, the amount of effort you put in these charts is wild, and they're so informative. Folks, go visit him at ord-oracle.com. Folks, thank you so much for joining me today and listening to myself and Tim Ord. Hope you have a great rest of your day. We will be back tomorrow. Take care now.